Hey, Bulls and Bears, what is happening? Hope everyone is well. It is Friday, September 30th, 2022, the last day of September, the last day of the third quarter. Tomorrow's going to be the first day of the fourth quarter, so welcome to the fourth quarter for those of you watching this on October 1st, and bye-bye to the third quarter if you're watching this today on September 30th. All right, I'm being a little silly as I often do in my Friday and my Saturday and my Sunday reports. I'm happy the weekend's here. Hope everyone's doing well. Let's talk about this news item here that's been put out on, I'd say, several YouTube channels. It was also reported in local publications and news in the Texas area. And this has to do with Walmart properties being foreclosed. People are reporting that this has to do with Walmart losing money and that there's big problems behind the scenes that we're not told about here, that Walmart's in big financial peril. Not necessarily true. Here's the breakdown of that. Yes, there are about 7 locations in Texas where the property, the building, the commercial building where these Walmarts are in these buildings. Keep in mind, most retailers don't own their own buildings because of the way the business works. Companies don't want to invest that much because they may have to change locations. How many times have you seen businesses going in and out of different strip mall units in different strip mall locations? And each one of those companies, they don't own these strip malls. They don't own the buildings in most cases. The owners of these buildings, several of these buildings, are actually in financial trouble. And this was reported out of the Dallas Express. I'll try to put up a screenshot here of the articles. The Real Deal also reported on this. Not that Walmart's in financial trouble. Of course, they are having some issues with overstock because it took them so long to get these items. And remember the reports that we did that we showed you all the ships that were offshore starting in mid to late 2020, mostly through 2021. They were really backed up. Now a lot of this inventories has been unloaded and it's arriving and it's sitting in warehouses and they have an inventory problem. But that doesn't have to do with this foreclosure situation. This has to do with the owner of these buildings, of this commercial property. And commercial real estate is also leveraged, just like everything in our economy is leveraged based on debt and borrowing. So the owners of these commercial buildings, they take out loans in many cases. In most cases, they take out loans and they depend on the revenue received or the profits received from the rents. And that's why it's big trouble when you see a vacant commercial building, because there's often an owner out there of the commercial building that's not getting any rent because it's vacant. And a lot of times they have loans. And that's why it's possible to also have, just like a housing bubble, you can have a commercial property bubble because too much lending and too many loans, leverage, can really inflate property prices. And it's not limited to single family homes or private homes. It's also in the commercial sector. So many are saying we're going to see a commercial real estate drop similar to what we're going to see in the housing market with the US. And let me go ahead and read you an excerpt out of this article, and then we'll break it down for you. Carrollton-based investor has reportedly defaulted on over $41 million in loans. The 7 retail buildings, all occupied by Walmart neighborhood markets, are scheduled to be sold at foreclosure auctions early next month. So the buildings are undergoing foreclosures. They're going to be sold at an auction. But Walmart could technically still stay in there throughout the entire process. It's similar to someone getting foreclosed on their home. The home gets bought by an investor and the home happens to be tenant occupied. The investor that bought the home can choose to keep the tenants in there, keep getting the income, or they can say, no, we're going to do something different with the building. So it's not guaranteed that Walmart will be leaving these locations, but it's possible that they stay in these locations. All right, so anyone thinking that Walmart, the company, is facing foreclosures, not necessarily the same thing. Walmart's still doing good, but there's danger signs on the wall. There's danger signs in retail in general because of the overstock and all these goods and supplies that they have, and also because the consumer is in such bad debt and the cost of living so high. People are spending so much money just to fill up their gas tanks and to pay their rent. And other areas that we see that prices just skyrocket, people are having trouble. Utilities, people are having trouble just across the board. Even Amazon, though, is having some difficulties. Take a look here. Wolf Street reported this. Amazon to close 4 of its 5 U.S. call centers. 4 out of 5 call centers. Do they see something on the horizon? Do they see something big on the horizon? Closing 4 out of 5 call centers. That's pretty big. They're shifting to work at home after closing 44 warehouses and halting construction on 7 office towers. Think about the magnitude of this. Closing 4 or 5 call centers, closing 44 warehouses, and halting construction on 7 office towers. That's huge. So obviously at one point they saw enormous growth on the horizon to be able to put into process construction on 7 office towers. Now they're halting construction on the 7 office towers. What has changed? What do they see on the horizon? Please let me know what you think down below. And retail is going to get very interesting in the months to come. And we're going to keep on top of it here. So please make sure you subscribe. This is a very, very important time to keep on top of what's happening in the economy, the markets, the financial system, your money, my money, you name it. We're going to talk about it here. Now, let's talk about what Amazon's doing with the work at home thing. So this is actually good news for people that need to work at home. People want to work at home in many cases, but they're going to need to work at home. When you look at the cost of fuel, the money saved by not commuting back and forth every day to work is huge, and it's laid out right here at Wolf Street. Quote, we're offering members of our customer service team the increased flexibility that comes with working virtually. An Amazon spokesperson told Bloomberg, continuing, we're working with employees to make sure their transition is a seamless one while continuing to prioritize best-in-class support for customers, unquote. A very good thing. Working at home, I work at home. Not just here on this YouTube channel, but with my regular job. And you can't beat it. And it saves a lot of, think about the pollution it saves. Less people driving back and forth, less pollution, less exhaust fumes, less gas being burned, less gas being used. It's a money saver. It's good. It's a good thing. So good companies, in my opinion, allow this to happen. We've seen people out there like Elon Musk saying, no, people need to come back to the office. If they don't, we'll consider them quitting, things like that. Okay, so we talked about commercial real estate, and we told you how that can be also in a bubble because of lending, just like the housing market. Then we transitioned to retail, but back onto real estate for a minute here, the housing market, not commercial, but the U.S. housing market. Morgan Stanley expects home prices to dip next year. What took them so long? We told you here on this channel about a year ago that the second half of 2022 was going to begin to see price declines, and that's exactly what's happened. We've seen now 3 months of price drops, median prices dropping nationwide, and now Morgan Stanley's finally jumping on the bandwagon. Why can't these financial institutions, these experts, as some call them, why can't they tell us these things 6 months or a year in advance? Right? It's always rosy. Things are always rosy with these talking heads and with these institutions, with these companies. Things are always rosy until it hits the fan. Then they jump on the bandwagon after the decline is obvious, and then they say, oh, by the way, we see prices dipping next year. Here's what they're saying. They're saying we do not see a material correction in home prices. They're saying year-over-year numbers are going to turn negative. And by the end of 2023, they see a negative 3% price drop. And you know what that means, right? If they say negative 3%, that means it's going to be probably 3 or 4 times as bad. I expect a 9 to 12% price drop. Not a crash, but definitely a lot worse than Morgan Stanley is predicting. So let me know what you think. Is it going to be 3%? Are prices going to go back up? Or is it going to be closer to what I think, 9, 12%? Or is it going to be much worse? Is it going to be a crash? There's still some of you out there saying that this is going to crash. And to me, a crash would have to be 25% or more in a year. And technically that wouldn't be a crash because it's taking a year. But to even be considered a housing market crash, I would need to see 20 to 25% in the year. Hope everyone liked this report. Please let me know what you think about the Walmart locations facing foreclosure, those commercial buildings, Amazon working at home, closing those call centers, and canceling construction on 7 towers. That's huge. What's going on behind the scenes? Something big, it feels like. Morgan Stanley finally jumping on the bandwagon of the home price declines. Thanks everybody for being here. Big love. Bye for now. Keep stacking.